Okay, let's just dive right in. It is January 2026, and we're looking back at 2025 as the year that, well, it seems to have completely rewired how we think about money.
It really, really was.
Uh-huh.
I mean, we're so used to fintech changing in these tiny little increments, right? A slightly better app, maybe a faster transfer.
Mm-hmm.
But the source material we're looking at today, this script from the IA protocol,
Hmm.
it basically argues that last year was uh, the moment the training wheels really came off.
Which feels timely because money management is, let's be honest, it's that constant low-grade headache for almost everyone.
Oh, absolutely.
You know the feeling, right? You're checking your bank balance with one eye closed, just hoping.
Hoping it's not red.
Exactly. Or you just avoid the app altogether for like a week. The classic ostrich strategy.
That's it. It's universal. But the whole point of our deep dive today is that we might be seeing the end of that anxiety.
Yeah.
We're moving from tools that just, well, report on your past mistakes.
They judge you.
They do. To tools that actually help you make better decisions.
Hmm.
The source calls it the shift from passive spreadsheets to active coaches.
I really want to double click on that phrase, passive versus active, because for years, fintech just meant a prettier spreadsheet on your phone.
Right.
My banking app would tell me, hey, you spent too much on coffee 3 weeks ago, which is not helpful. That's an autopsy. It's not a diagnosis.
It's pure hindsight. And the source really paints a clear picture of this old way.
Yeah.
Spreadsheets, calculators, and then for the very wealthy, human advisors.
For like $200 an hour?
Or more. And that's always been the barrier, right? You need to have money to learn how to manage your money. But that's where 2025 really changed things. The text we're looking at has some huge numbers. The AI finance market in 2025 was valued at about $38 billion.
Which is big, but it's the projection that gets me.
That's the key. They're expecting it to hit $190 billion by 2030.
So that's, what, a 30% annual growth rate? Something
No.
like that?
Yeah, around there. And that kind of growth, it doesn't just happen because something is a neat gimmick. It happens because it's solving a real massive pain point.
And the banks are seeing it too.
Oh, for sure. Major banks are using the same tech to save, I mean, the numbers are between $200 and $340 billion a year.
Wow.
But the real insight for us, for the average person, is that those efficiencies are finally starting to trickle down to the apps we actually use.
So it's not just the bank getting smarter for its own sake. It's about giving us a kind of a crystal ball for our own money.
That's the perfect way to put it. It's the shift from looking in the rearview mirror to actually looking through the windshield and seeing what's coming.
Okay, so let's get specific. Because AI in finance sounds so abstract, like something for Wall Street.
Right.
But the source really breaks down these pocket financial coaches.
Yeah.
And the first big change is just the price.
It's the democratization of advice. I mean, we said a human advisor is hundreds of dollars. These apps, the source mentioned a few, like Copilot, Cleo, Monarch Money.
Yeah.
They're running between, what, $5 and $15 a month.
It's the price of Netflix. But is it real advice, or is it just a calculator with a nicer font?
It's more like analysis.
Right.
Let's take Copilot, for example. The source highlights it pretty heavily. Its special sauce is pattern recognition.
Okay.
It doesn't just see a transaction. It sees your life. The example in the text was about a Friday night Uber.
Yeah, I love that example.
That's perfect. Because a spreadsheet just sees a $15 expense. But the AI has your history. It knows that, say, 80% of the time you take an Uber at 7 p.m. on a Friday.
You're going out to eat.
You're going out to eat, and then maybe for drinks. So it knows before you do that you're about to spend another $100.
So it adjusts my weekend budget in real time. It's saying, hey, hold on, let's earmark this cash so you don't accidentally spend it on groceries tomorrow.
Exactly. It's living the weekend with you, not just judging you on Monday morning.
That's a game changer. Now, what about Cleo? The source describes it as having a personality. Why would I want my finance app to have a personality?
Engagement. Plain and simple. Numbers are boring. Spreadsheets are scary. Cleo sort of gamifies it by acting like a brutally honest friend in a chatbot.
I've seen this. You can literally text it, can I afford this $200 jacket?
You can. And the answer isn't just yes or no. It looks at your income, your bills, your habits, and it might say, technically, yes, the cash is there, but if you buy it, your phone bill is going to bounce next Tuesday.
That's context. My bank balance just says, you have $500. Cleo says, yeah, but 400 of that is already spoken for.
It gives you the why. And it can be funny. You can ask it to roast you, and it'll make fun of how much you spent on tacos.
Yeah.
It just breaks that tension around money.
Okay, and then there's the more grown-up stuff, like personal capital.
Right. That's for the wealth management side.
Yeah.
Investment analysis, retirement planning. It used to be a total black box, right?
Yeah.
You gave your money to an advisor.
And paid them a fee and just hoped for the best.
Exactly. This tech uses algorithms to spot things like hidden fees in your portfolio. Those little 0.5% fees that a human advisor might not tell you about.
Because they're making a commission on them.
It's just unbiased math. Then there's one more category I think is fascinating. The invisible savings apps, like Digit or Plum.
The idea here seems to be, what, tricking yourself into saving money.
It's all behavioral psychology. When you manually move $100 into savings, you feel that. It's a loss. You feel the pain of not being able to spend it.
Mm-hmm.
Digit and Plum just bypass that pain. They analyze your cash flow every single day and pull out tiny amounts of money that you genuinely won't notice are gone.
Like $1 here, $3 there.
75 cents. I mean, tiny amounts, but it's algorithmic. It knows your rent is due, so it won't touch money you need. But after a year, people look up and they've saved thousands of dollars without ever feeling the pinch.
It takes willpower out of the equation.
Which is a finite resource for all of us.
Okay, so we've got the apps, we have the cheeky chatbots, and the invisible piggy banks. I want to pop the hood now. The source breaks this down into 3 key technologies, and I think it helps to know this isn't magic, it's just math.
It is absolutely just math. The 3 pillars are machine learning, natural language processing, and predictive analytics.
Okay, machine learning. It's the buzzword of the decade. In the context of my wallet, what is it actually doing?
It's basically pattern recognition. We talked about the Uber example. That's a perfect case. The system sifts through thousands of your past transactions to find trends you'd never see yourself.
Because I can't remember what I had for lunch 2 weeks ago.
Nobody can, but the machine knows. It might see that you always overspend the week before you get paid, or your grocery bill doubles every other Tuesday. It sees your actual life, not the one you plan for in your budget.
It stops me from lying to myself about my habits.
It holds up a data-driven mirror. Exactly.
Okay, pillar number 2, natural language processing, NLP. We touched on this with Cleo. Is it just a fancy chatbot?
It's really about understanding intent. Think about old banking apps, even from like 2023. They were a maze of menus. Click here, filter this, export that.
It was horrible, just a database interface.
NLP lets you just ask a question in plain English.
Yeah.
Or Spanish. Or Portuguese, which is a huge point the source makes.
Right, for accessibility.
You can just ask, how much did I spend on tacos in November? The system has to understand tacos means dining out. It has to understand the time frame, and it has to pull the data. It turns a database into a conversation.
Which brings us to the third one, the one that feels the most like science fiction, predictive analytics.
This is the real engine of the active coach. It's all about forecasting your cash flow. It looks at when your paycheck actually clears your account.
Not just the day you're supposed to be paid.
Right. And it overlays that with your bill schedule. It knows the rent is due on the 1st, but your paycheck might not hit until the 3rd because of a weekend.
And it sees that gap coming.
It sees the gap. And it can warn you, hey, in 6 days, you're going to be negative $40, even if you have money today. It turns a potential overdraft fee into a problem you have time to solve.
That is the game changer. It gives you time. Okay, let's zoom out. We've been deep in our own pockets, but the source has a big section on the macro view, the corporate and global picture.
And this is where the scale is just staggering. The source says that by 2025, 85% of financial institutions had integrated AI. 85. That's up from just 45% in 2022.
That's a massive jump for an industry that moves so slowly.
It's a revolution, and it's being driven by the CFOs. For them, it's not about personality. It's about risk and efficiency. And the #1 application is fraud detection.
The stat was 90% faster fraud detection.
90%. I mean, think about the millions of transactions a bank sees every second. Humans can't review that. AI can spot the patterns of fraud in real time, a specific sequence of small purchases from weird locations. A human would miss it. The AI flags it instantly.
Which protects my account from being drained.
Correct. The other big corporate shift is something called dynamic budgeting.
Okay, translate that from corporate speak for us.
It's actually pretty simple. A big company usually sets a budget in January, and then that's the budget for the year. But the market changes by June, right?
It's not working off an outdated plan.
Exactly. Dynamic budgeting uses AI to analyze real-time market data supply chain info, whatever,
Yeah.
and it adjusts the budget allocations on the fly. It makes these giant companies more agile.
But there was one part of this global section I found really inspiring. It wasn't about profits, it was about inclusion.
This is the real aha moment in the source, I think. We always talk about the unbanked, people with no access to the financial system. The source highlights companies like Nubank in Brazil, MoneyPoint in Nigeria,
You're
like
talking about over 1 billion people.
1 billion people who are invisible to the traditional banking system because they don't have a credit history. It's the classic catch-22. You can't get credit if you don't have credit.
Right.
But these new companies use AI to analyze what they call alternative data.
What on earth is alternative data?
It's fascinating. It can be your utility bill payment history, your mobile phone top-up records, or, and this is a real example, your phone battery charging habits.
Wait, what? How does charging my phone tell a bank anything about me?
It's a proxy for reliability. Someone who consistently keeps their phone charged and their data topped up is demonstrating consistent forward-planning behavior. The AI correlates thousands of these tiny data points to build a trust score for someone with no formal history.
That is wild. So it's judging you on your actual behavior, not just some number from a credit bureau.
It's democratizing access to capital. A street vendor in Lagos can now get a microloan to buy more inventory because the AI can see the transaction flow on his phone. It's a true revolution.
Okay, we have to talk about the elephant in the room, though, the nervousness. The robot is controlling my money. The source mentions a concept, agentic AI, which sounds a little scary.
It's the next step. Agentic just means the AI can do things, not just analyze them. So for a bank, it might be doing all the research for a big loan application.
But it's not signing the check, right? Please tell me it's not signing the check.
No. And the source is very, very clear on this. It's all about the human in the loop.
The safety net.
Exactly.
Yeah.
The AI does all the grunt work, accelerates the process, improves accuracy, but the final high-stakes decision, that's still a human. You get the speed of the machine with the conscience of a person.
That's the balance. So, to bring this all home, I'm a listener. It's 2026. I'm still using a spreadsheet or maybe just the hope and pray method. What's the takeaway?
The source suggests a really simple first step. Just be AI curious.
I like that. Don't have to marry it. Just take it on a date.
That's it, exactly. You don't have to change your whole life. Just download a free trial of one of these apps, Copilot, Cleo, whatever. Connect your accounts and just watch it for a week,
Just to see what it sees about me.
just to see the mirror. The insight you might get from 1 week of pattern recognition could find a leak in your budget that pays for the subscription 10 times over.
It's low risk, potentially a very high reward, and honestly, it's just cool to watch it work.
It is. And I'll leave you with this final thought, which is really the core of the source material. This transition is happening whether we get on board or not. The banks are already using this tech to optimize their own profits. So the question isn't really if you'll use AI for your money. It's how much money are you leaving on the table right now by trying to fight a supercomputer with a pencil?
Wow. That is a haunting thought to end on. Am I fighting a machine with a notebook?
You're probably losing if you are.
Well, on that note, we'll wrap up this deep dive. This has been a fascinating look at the wallet of the very near future.
Thanks for having me. It's an incredible space to watch right now.
Thanks for listening, and we will catch you on the next deep dive.